Good morning, randos. Let me clean up a little bit. As you can see, I have like mail for days. Maybe I'll get to it at some point. You know what? Let's put it in the mail drawer. There it is. Okay, cool. All right, so I will read your mail if you send it to me. But if you're someone else, I probably won't read it. Okay, so what do we got going on here? Let me minimize some stuff. Let me get it in the group. All right, whoa. You know, guys, sometimes I get really flattered when I take a look at the attendance. Really, really super cool. So thank you. And again, this is the last week that we are doing this, so I do understand that it is human behavior that you can have something every single day, but then if it's about to go, you want it, which is cool. Like, who doesn't do that? Like, I remember when I was younger, I would have all these toys, and I was the oldest of 6 boys, and I would not play with even half of them, right? But if one of my brothers wanted to, oh, Deborah, by the way, fantastic. Deborah has made the first purchase for this month's RHINO charity. I just saw it yesterday, and Deborah's amazing. So thank you, Deborah, and greetings to Celebration, Florida. What was I gonna say? Yes, I'd have all these toys, and I wouldn't even use half of them. And then if one of my brothers was like, I want that toy, I thought it was like the most amazing toy in the world. How can I ever have not used this toy? I better use this toy because someone else wants it. Now, I know that's not the same as this, but it's the whole act of something being taken from you. In fact, it is behavioral science law that people are much more motivated by the fear of loss than the prospect of gain. In fact, I believe that calculation comes out to 2.3. Let me take a look. I see a question. How long will it last? Anonymous attendee. Well, anonymous attendee, this call is from 10 to 11. We do a little bit of, go over some stuff, and then we take a look at stocks and stuff. And I say stuff very generalized. It's a good program. So if you have an hour, stick with us. If not, we will email you the replay as well as put the replay up. Cool. So that's that. I was saying something. I don't know. All right. So anyway, I really did just lose my train of thought. You know, a lot of times when someone messages me, and it's funny because I've been on these calls many times and someone messages me and they go, no, that's to you privately. Don't say it out loud. And I'm like, do you understand that I am live and I only have one mind? I know it seems like I'm like a complete do-to-do and I have like 17 personalities, which I probably do. No, I don't. Yes, I do. But if someone messages me something, I do read it out loud. Anyways. Hey, Brooks. Brooks is amazing. Brooks emailed me twice yesterday. He has a new algorithm set up, and he gave me a little bit of caution to Twitter stock. So I am going to heed it. I have been considering maybe sell some weekly covered calls, in which case, if I do, I kind of am leaning towards it because I want to go ahead and share with everyone what that looks like. But I don't want to do something that I wouldn't want to do by myself simply for the benefit of teaching the mechanics of it, right? Like at the end of the day, we want to make money. And if we're able to teach all the ways we best make money, cool. But we don't want to go ahead and artificially find a reason to do something that wouldn't have been the best reason to do it to begin with. Anyways, with all that said, let's get into it, right? So yesterday, we were taking a look at the market like we do every single day, and yesterday was Monday. And what did we say? We said over the weekend, we're able to read reports, and we read it on Twitter, which is kind of why I'm so partial to Twitter. Everything I get from Twitter. Twitter, I believe, is the news source of the world. I believe Twitter is larger than any news company ever in the history of the world in terms of capability. Now, it's not larger than any of them in terms of market cap and scale, and that's a managerial thing. That's an execution thing. But to have a platform that all newsmakers are on, that they can press a button and disseminate that message to everyone immediately, is just better than any reporter that has to then go ahead and type up a report, send it to an editor. The editor then goes ahead and publishes it on the page. And actually, more times than not, MSN and all these other news medias, they don't have, you don't wait the next day for the newspaper. They go ahead and publish it on their Twitter feed. So Twitter is the news media. And I think there's the value in that. And I think, and so it's like, well, and you're buying options. How is betting on a stock price by a certain date congruent with having a value in the long-term prospects of a company? Well, it comes down to price, right? If I believe this company has that value and the company comes down to a price point that any do can take a look and say, wow, that's that cheap. We can buy that whole entire thing for that minuscule price. Well, then I'm going to do it because they're purchasing with the money today based on their long-term prospects, but that transaction's an in-the-moment transaction, right? So we've always believed that to be the floor on the price. And you can come out and say, well, you can kind of make that argument all the time. It's really discretionary to you. It's your opinion on your value of the company. Yes, I agree. But when the company itself then comes out and says they're using their money to buy their own stock, well, now the company itself, who knows the company knows the company better than I or anyone ever will. And if they're going to buy their own stock and they're doing it at an accelerated pace, I feel comfortable. Okay, this is the time. This is the price point that, like, yeah, maybe it goes up and down a little bit, but like I feel comfortable here. And to that point, we veered off everything we've been doing. There's no red and greens. There's no 16s and 17s. This is purely a fundamental analysis that's allowing us to participate in the stock. So we're teaching two different ways of doing things. Anyways, getting back to the point. So over the weekend, we saw that the Ukraine president actually invited our elected president, Joe Biden. And I say that like, well, my politics don't matter. Anyway, so I called him and they're like, hey, listen, I don't know why you're spreading, and I'm paraphrasing, right? I don't know why you're spreading so much misinformation. There's not a war here. Why don't you come over to Ukraine and take a look for yourself? And of course, Joe Biden's not going to go to Ukraine. He might send Hunter Biden there because they're like best friends. Again, not getting into politics. But we knew that there was no war. And not that we knew that there was no war, because there's really Russians over there and blah, blah, blah. But we believe that the urgency, the DEFCON 5, so to speak, which DEFCON 1 is actually the highest one, but people say 5, so I'm sharing that. But the DEFCON 1, let's say it the right way, has gotten people so scared. And we saw that as our opportunity, right? Because we saw the markets pull back Friday based on these reports. So we're not making up an opinion. We're saying there's the reports, there's the market reaction. Therefore, we know that it has a market value. So if we believe those reports were erroneous or that they had a level of urgency that was not factual, then that's our opportunity. In which case we purchased more Friday and said, all right, listen, we don't believe these reports. We don't believe them to be true. Therefore, we're going to wait this out. So anytime you buy anything, it's because, again, when you buy something, it's with the belief that you're going to sell it. I don't think anyone is buying Twitter because they believe that they want to own Twitter because they have they want to own enough stock that they can get a board seat on Twitter so that they can manage Twitter one day. No, you're buying Twitter because you believe you can sell Twitter at a higher price, which means you believe that the price point it is today provides a value that you're able to identify because you believe the price point is here, but the real price point should be here, and you're willing to invest along that appreciation. So you have to find things that allow you to go ahead and identify, well, this is erroneous, this is an opportunity, this is an opportunity, this is an opportunity. So the two things that came out were Thursday, the Federal Reserve president, the St. Louis Fed president, James Bullard, came out and gave overly hawkish assessment of rates. Hey, listen, we believe rates should go up to 1%. We believe there should be surprise meetings. Like, this guy's actually saying they should do meetings out of nowhere to start raising rates. You could not get more hawkish, right? You are not only saying that you should raise rates, you're not only saying you should raise it 100 basis points, but you're saying you should do it when people aren't even expecting it. You should just come out and do it. Well, I don't know a more hawkish point of view on rates. I don't think you can have one. I think that is the most hawkish way you can ever describe rates ever in the history of the world. Not only do we think they should go up 100 points, but we think we should do it when you're not even planning on us to do it. Okay, well, market tanks. Okay, cool. Now, who was James Bullard? Well, St. Louis Fed actually does all the data. So if you go into Google and type in St. Louis Federal Reserve, you'll get all the most amazing data on this country in terms of monetary policy because they're the ones that create it. Therefore, if he's in charge of the bank that's creating all the data, he's kind of important. And he's a voting member, and he's considered to be the person that Jerome Powell, which is the head of the Federal Reserve, listens to and leans on most. So he's kind of important. He would be, well, in a real world where you had a real president, a real vice president, he would be considered the vice president, right? Okay. So it's kind of important. So when he comes out and says that stuff, the market listens, and the market came down 500 points. Then the next day, and wait, so, okay. So we've always had the assessment and the belief that they're not really going to raise rates. And if they do, it's because they think they're cute, right? Like, we don't think they're going to raise rates, because if you own a calculator and you have a basic understanding of like algebra, right? Like regular math, you understand that if you owe 30 trillion in bonds, and those price and the amount that you owe on them is based on an interest rate, and you can't afford them today, and your whole country liquidated, it's not even worth 30 trillion, then you would never raise rates on yourself. You would never go ahead and raise your own, not borrowing. You would never raise your own borrowing cost. You would never say, oh, I owe 200 billion this year, but I think I'm going to raise rates so that I can owe 300 billion next year. You just wouldn't do it. And on top of that, you wouldn't do it because the Federal Reserve so the Treasury issues a bond. Nobody wants to buy the bond. The Federal Reserve buys the bond. The Federal Reserve prints money out of thin air to buy the bond. Therefore, the government gets the bond. They do that through the banking system. So the bank, let me start over. The government wants to go ahead and borrow money. Okay, so they issue bonds. JP Morgan and the other banks come in and buy those bonds. JP Morgan and the other banks borrow that money from the Federal Reserve at the Fed funds rate, which is 0. Essentially, they're able to borrow infinite amount of money at 0%. They use that money to buy the bonds. The government gets the bond. The bank borrowed the money. The bank borrowed the money from the Federal Reserve, who doesn't have money. They print money. Therefore, there's no new money in the economy because it's borrowed. But if you continually borrow, then how is that not new money, right? Like if I borrow $100 from you and I say, okay, when I borrow my next 100, I'll pay that 100 back. You're like, I get that you're borrowing and paying, but if you just do it like sequentially, it's not really borrowing anymore. You're just taking it from me. That's how they go ahead and play that game. So if that game's being played, well, then the entire globe has a faith in those bond prices, because those bond prices aren't calculated to interest rates anymore. They're not calculated. They're not calculated to economics anymore. They're not calculated to tax receipts and GDP and all the stuff that a bond would be calculated to. No, they're calculated to that you have a buyer. Remember, a market's always a buyer and seller. We believe the buyer and seller uses information that we can all share. Therefore, we are able to price things in our opinion based on the information we have. But that's not the ultimate arbiter of the price. The arbiter is the buyer. So if there's some cuckoo bird that's just buying something, well, it doesn't matter that the thing's not worth that. It's worth it to him. Therefore, the price goes up. So the Federal Reserve is the buyer. This whole charade is the buyer. Therefore, everyone that owns a bond feels comfortable owning a bond because they know there's always buyers for it. Well, if you go ahead and raise rates, you then lower the price of all those bonds, because as new bonds get issued with higher rates, then the old bonds that have lower rates are not worth as much anymore because they don't have the highest rate available. Therefore, those bonds all go down in price. Well, what happens when you have 30 trillion worth of bonds all going down in price and and you're telling them all you're going to go down in price and we're going to raise rates 7 times and 8 times. In fact, your bonds we're going to slice in price 7 or 8 times. What do you think the holders of those bonds do? They go, are you out of your mind? You think I'm going to hold this? Will you go ahead and decimate the value of it? Sell. What happens when you sell a bond? The price goes lower. Well, how do you go ahead and entice someone to buy a bond? You have to raise the rate. Okay, you don't want to buy it at 1%? Okay, what about 1.5%? I'll give you 1.5% if you buy this bond. No, not 1.5%, 2%. I'll give you 2%. That's how you get people to buy bonds. Meaning the market to bond price ultimately flattens when the yield attracts enough buyers to come in and buy that bond. So not only does raising rates increase the borrowing costs of this nation, not only does it completely make everyone that owns a bond want to sell it, but you can't tell when they're going to stop selling because they're all in it artificially to begin with because you were the buyer. Therefore, the selling is going to be such a disaster that bond yield, who knows how high it spikes before you get a real buyer. Well, guess what? That bond yield is borrowing cost for this nation. So what's that bond yield going to spike to? 5%, 6%, 7%? Do you know what 12% this nation doesn't bring in a single net dollar? The tax receipts of this nation are $3.5 trillion, which equals 12.5% on that bond. We're at 2% now. So, before I get all worked up, my belief has always been that they are not going to raise rates because I could do math, right? And you could do math too, so I think we could agree. But I have seen nothing from this administration or this Federal Reserve that allows me to believe that they have any ability to persuade, influence, or play shystily, right? Like for instance, if I was running the Federal Reserve, I would say, hey guys, like I need to raise rates. I need to tell this market like I'm serious because my integrity, the Federal Reserve only works if people trust the Federal Reserve. If the Federal Reserve cries wolf, then no one's coming to save that child, right? So they kind of put themselves in the box where they have to raise a rate once. Because if they don't raise rates at all, then the market's like, ha, you guys came out and said you're going to raise it 100 points and you were just bluffing. All right. And then it's off to races. The market goes to like probably 50,000 by the end of the year, right? Okay. But if they raise rates once, then it's like, hey, we were serious. And then the market is like, okay, they're serious. We better do our thing. And then you're able to say, okay, once was enough. You guys, it's like when you have a child and they do something really bad, you want to punish them. And you're like, this boy did that. I'm going to punish him for years. And you punish him for like a day. And all of a sudden he's like an amazing child the next day. You're like, okay, a day was enough. I don't need to punish you for years. A day was enough. That is a good idea if you have the ability to talk to all your counterparties. Hey guys, listen, we're all left. We have to raise rates. I promise you, look at my eyes. We are only going to do it once. Do not listen to anything I say out there. We're only going to do it once. Therefore, do not sell your bonds because if you sell your bonds, you will it's mutually assured destruction. If one of you sells, we're all left. So don't do it. I guarantee you, though, I will do it once. Do we have an agreement? What do I have to give you to make this work? I don't think they have that person. Like, I think President Trump could do that. But even with that said, he's not the Federal Reserve chairman, but it's politics. And the president would call the head of the Fed and they would do this, right? Like, I don't think Biden can do that. Therefore, if this Fed goes ahead and raises the rates, even 0.25%, I really truly believe it's the beginning of the end. It's just Armageddon. So in my belief, or at least in my perspective, what I would then do is we are shorting everything emerging market because they all price their bonds in dollars. And we're not going to get into how that math works, but they're all annihilated and every emerging market will go to zero. So we'll have fun. Like, we're going to make a lot of money. Either way, we're making money. But between now and then is how do we go ahead and identify what's important and how to trade a market? Because if you're losing money, well, then you might not have any money by the time you get there, right? Like, it's never cool to lose money. I don't care what anyone says. Like, we're down in our portfolio from our high last week. And that doesn't mean, and that makes me feel silly. Like, I'm not happy about that, but I have a plan, right? But if I could go back in time, would I have sold it there and started that plan today? Yes. So anyone that tells you, oh, I'm down, but I meant to be, is a liar because nobody needs to lose money. So the point being, on Thursday, when they said they were going to do that whole rate thing and got the market spooked, so that's an opportunity. We said, we don't think that's actually going to happen. So the market selling off here is an opportunity because we believe it's going to rehab itself much higher. Okay, then Friday comes around. Oh my God, there's going to be a war imminently and the US is moving their base from Kiev. And first of all, did anyone forget the campaign? Like, Ukraine has so much dirt on Joe Biden. And if you think that Putin and Russia doesn't have equally as much dirt on Joe Biden, considering his son is a crack addict that's been taking money from Chinese prime ministers for like however many years to give to the big guy, you're out of your mind, right? This isn't, I'm not speaking politics, but I'm also not an ostrich. Like, I know what's been silenced. Like, that stuff really happened. So the fact that our president can be completely blackmailed means he has no power. There's nothing he's going to do that's going to do anything to anyone because they're just going to bury him. Unless Joe Biden has like a fatal disease where he's going to die tomorrow. And he could say, all right, well, you can do whatever you want to me. I'm dying tomorrow anyway. And short of that, nothing's going to happen. They're going to push him around. He's going to hope to save a little face. The Republicans are going to go ahead and win this year in the midterms because they're going to point out how inadequate our president is. And then maybe there'll be some type of argument and some type of political turmoil later this year because Democrats are kind of good at like mail-in ballots, right? Like, I know that town only has a population of 1 million, but they mailed in 200 million ballots, right? And they did it all at 2 a.m. Anthony, stop talking politics. So I don't think this is going to be a good political year. But do I think Biden has any ability to have any leverage to go ahead and shake things up without getting kicked around? No, I don't. So if I believe Fed policy is overly pessimistic, like people are scared of it, and if I believe the war talk is overly pessimistic, people are too scared of it, well, then if I see those two headlines bringing the market down on consecutive days, then I'm obviously thinking to myself, opportunity, 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 right? Okay. So the weekend happens and we're able to read the reports that the Ukraine thing really isn't a big thing. Okay. So then we come into Monday, yesterday. And the market, I believe, started down 300. It ultimately went down 400. It ended up down only 160. The Nasdaq was the strength leader. We saw Twitter was up a little bit early in the day. So we said, okay, it's up. It's hold it in there. We'll buy a little more here because we've always left money on the sidelines. Because when you're dealing with political headlines and geopolitical headlines, et cetera, you don't know what the headlines are going to be. You can extrapolate, you can guess, you can forecast, but you should always have some money sitting around in case you're wrong. In fact, we still have money sitting around. In fact, if those things are down, I'll buy more today because that's what the money's there for, right? So we bought more yesterday. And we saw the market go down 300, 400, ended up down 160. And we're like, okay, that's good, right? The market was down, the volume was down, the volatility decelerated, all good stuff. In fact, we sat here and said earlier in the day when we were on our live, all of these are good. We're looking for a near-term bottom. We think there's going to be some type of relief. If somebody can just wake up and read a report that this war thing really isn't happening and that this rate thing really isn't going to be that bad, we should really pop up. Sorry if you heard that. So this morning, I posted in RHINO Wealth, and I believe the futures were up 400 points. Russia's bringing back some of their people from that, from the border. And everyone's like, oh my God, thank you God, I couldn't believe it. This was about to be the Bay of Pigs. And, it's a miracle, it's a miracle. No, it's not a miracle. They were going to do this the whole time. Like, am I losing my effing mind? Because if anyone believes that I just know the future, you're crazy. I don't know what's going to happen tomorrow, but I can take a look at what's going on and say, guys, really? Like, can you see what's in front of you? So here's where the setup begins. And now also I posted in RHINO Wealth 2 more things. Intel is purchasing another company for $5.4 billion. And Constellation Brands and Monster Beverage are looking to do a merger, but more so than that, if you read the article, which you couldn't because I just posted a screenshot, Constellation Brands is actually looking to buy Monster. They have the money to do it. It'd be like a $40, $50 billion purchase, I think, somewhere over there, or less, I don't know, but they have the money to do it. And it brings us back to our original point. When you look at the macro and you say, where does money flow go? Because let's go back. What's a market? It's just money flow. That's all it is. Is the money going to go to government or is the money going to go to the private sector? If you believe that government is such a good harbinger or arbiter of your finances, that they really, what's the word I'm looking for? They are, I don't know, but they act in your best interest and they are the best, anyway, that they're where you want to put your money, fine. Or you can take a look at corporate balance sheets and say, well, would I want to put my money in corporations, corporate America? And the answer is, if you can read a balance sheet, corporate America, right? So that was our original premise, right? Like once you get that right, then you can get the rest right. Then you can say, all right, well, this is down, but it's only going to be down temporarily because money's going to come in at some price point to buy it back. You have to get that right, because if you don't get that right, it doesn't matter how far things go down, money's never going to come back in because money's always leaving to go there. What we've identified, in our opinion, is money's always going to flow into the stock market because it's not going to go into the government markets. There's only 2 places in the world that big money can go: public sector or private sector. That's it. If you had $1 billion and you wanted to put it somewhere that you did not move a market, you were guaranteed to get it back, where would you put it? You couldn't go buy $1 billion in real estate. Sure, you could, but you wouldn't have one house. You have to buy a whole town. You have to buy a big sky-rise building. Where would you put that billion? No, but instead you could buy $1 billion worth of Microsoft stock pretty easily, actually. And guess what? Microsoft is going to pay you back. In fact, that money's guaranteed. In fact, they're even going to give you a dividend yield on it. In fact, when you put your money in Microsoft, they have like 100 billion of their own money in Microsoft. In fact, they're still growing. In fact, they just made like $100 billion last year. So if I had $1 billion, where would I want to put it? There? Or do I want to put it in government bonds? Like, that's not even a question. It's not even a hard thing to decide. So when we were able to get that correct, which I believe we got correct, right? Then you see Amazon instituting their first stock buyback in 10 years. You see Facebook buying 20 billion worth of their stock last quarter. You see Microsoft buying a whole company, Activision, for $70 billion. Now you see Intel buying another company for $5.4 billion. You now see Constellation looking to buy Monster Beverages for 30, 40, whatever billion. You see Twitter, which is only a $28 billion company that has $7.5 billion in cash, taking $4 billion of their own cash to buy their own stock. The point is, when I see companies actually buying other companies or buying their own company, I then say to myself, okay, they're telling you what to do. Now, if you're sensitive around price point, don't buy options. Go buy stock. In fact, here's a deal. Well, not a deal. It's a suggestion, right? If you have any amount of money, go buy stock right now. Put it in the S&P 500, buy the SPYs, which is the ETF, walk away. 5 years from now, I guarantee you, I said it, it'll be higher. And but before you go ahead and take that guarantee seriously, if I'm wrong, I'm expecting that not only do I have to be wrong, but then you have to go ahead and show your losses, and then you have to sue me for those losses. And it would just be a whole lot of stuff I don't think you would ever do. I don't think you'd ever have that much money to show losses anyway. So I say that because I'm transparent, right? I don't think anyone's ever going to do that. So I finally found a way to use that word, but I don't use it lightly, right? Like I really, truly believe that in 2030, the market's going to be over 60,000. It's now 34,000. So to go ahead and buy stock here, I think is a good idea, right? I do it for my son. I do it for my family. Like, I'm not telling you anything I don't do. That being said, we're not buying stock. We're buying options. We're betting on a certain stock to be a certain price by a certain date. Now, if we put all this together and we've identified Twitter as the position that we think has the best fundamental story, and we bought options that don't expire for another 31 days from today, can we smooth out everything that we just shared over the next 30 days? I think so. Right? They already put in earnings. They already told you they're buying their stock back if it goes low, meaning the lower it goes, the more support the stock has. This war thing is already had the highest scare. I mean, unless someone nukes someone, right? Which we hope doesn't happen. This Fed Reserve thing already scared. Do you know? So the Fed could come out and say, we're going to raise rates. Okay, cool, right? Oh no, they're going to raise rates. But the market has markets. Like it has a 2-year yield market, it has a 2-year bond market. It has markets. Those markets already priced in that the Fed was going to raise rates, right? So when the Fed raised rates, what does it mean? They're raising rates so that all the rates get raised. Well, the markets are already believing that they're going to raise rates, that the markets already raised the rates themselves. The markets raised the rates, they already priced in 0.62% raise. So even if the Fed came out and raised 50 basis points, like 0.5%, it still would not be as much as the market's already pricing in. Therefore, the market is already priced in that they're going to do something more than anyone believes that they're even going to do. Therefore, it is our belief that when we see the rhetoric as hot as it can get, and we see the market pricing in the worst case scenario, that between now and then, even if they're right, that 30 days allows people to like digest it. Oh my God, my girlfriend cheated on me. I hate her today. A week from now, I'm like, I should have seen it coming, right? Like my volatility goes down. If the worst was to happen, the 30 days alone would allow me time to go sit in the corner and think about what happened. So even if that were to happen, I still think we're okay. But I don't think that's going to happen. So if we're priced in for the worst thing, what happens when something less than the worst thing happens? If we're priced for Armageddon war between Russia and Ukraine and it doesn't happen, what happens if something not as bad happens, right? If you see companies all over the place looking to buy stock, then do you think that they don't look at this time and say, whoa, all right, I'll buy right now, duh. And they are. So my job is to share research and to share this educational platform with you, right? To put things into perspective. And my job is actually graded every single day, because it does not matter what I say if our account is losing money. It does not matter what I say if I'm wrong. And that's what the market allows, which is why no programs like this exist. I don't know of a single person that goes ahead and offers research while the market's trading. Not one. Because you know how difficult that is? Do you know that I don't even know where the market is, and I'm going to tune into it right after we have this little talk, and it's either going to show me that I'm a buffoon that knows nothing, or it's going to show that I'm correct. Do you know I get graded every single second of every single day while the market's moving? Because in the market, you're either right or wrong. There is no middle ground. Because what is your account value? Did it go up or did it go down? Yeah, you might be right by next week, but today you're wrong. Yeah, well, I'm playing for next week. Well, if you knew what was going to happen today, why didn't you sell and buy back tomorrow? Wouldn't you want more at a lower price? Yeah, well, then you were wrong today. That's how that works. The point is in understanding that you're never going to be perfect, right? You got to weigh out, well, if I get too cute and buy and sell here, well, then I missed the bigger move, right? So that's kind of a little bit of a commentary on where we are and why we're in, what we're in, and what we believe is going to go forward. Now, what we're going to do is, before we go take a look at the market, one of two things is going to happen. And I want to share that before we look, right? Now, of course, I know that the futures were up 400. I already know that. I posted it, right? I don't know what it was up. I don't know anything market related after 9 a.m. I just don't. Okay. So here's the setup. Either the markets, because the market's been down so much on these cataclysmic headlines, the Fed's going to raise rates and put the country into bankruptcy, and or there's going to be World War III. I mean, is it possible to have worse headlines? I don't know how you rank headlines, but I don't know if there's worse ones. I don't think there is, right? Like, those are the worst headlines. So the market has come down in response, which means a lot of people that believe those headlines are justified in believing it because the market has been coming down. Oh my God, this is going to happen. The market agrees to, great. Now, if you believe those headlines and the market is sharing with you and agreeing with you in terms of price action, what's the best thing to do? You short the market, right? If you tactically want to make money on a market that you believe is going to go low, and you believe that the market is telling you and agreeing with you in your assessment that it's going to go low, you would short. So you would either buy puts and or you would borrow someone's stock, sell it, hope it goes lower so you could buy it back and give them the money, right? All right, Mr. Jones, I'm borrowing your stock. It's $10. I'm selling it. I come into $10. I hope the stock goes down to $8 because I'm going to buy it back, give you your stock back, only spend $8, and those $2, the 10 I came into and the 8 I spent is my profit. But what happens if that stock goes up? Well, now every point it goes up, I have to buy it back. That extra, every point it goes up is money I have to take out of my pocket, which equals a short squeeze, right? I have to buy that stock back even though I hate it, but because it's going up, I'm losing money. And therefore, if other people did it, we're all rushing to buy stock that we all hate, but we have to. And we have to do it because we're losing money every point it goes up. Well, if you're in an environment where the market has kind of like all the worst news is priced in, companies are still buying stock, there's money on the sidelines, and you have people that are chasing stocks higher because they have to, while allowing everyone to see the market's going up, I kind of believe, I don't know if it's going to happen yet, right? But we are setting the foundation for a rip-roaring rally. Rip-roaring rally, rip-roaring rally, rip-roaring rally. I had to say it 3 times fast because I'm a child, right? We are setting up that foundation. Now, does that mean it happens? Say no, does it? Does it mean it ever happens? No. But we're setting up the foundation. So how do we know what's going to happen? Okay. What we would like to see, although it would be painful to see, is that this market started up plus 400, came down to maybe plus 50, plus 100, and then built back up. Volume came in, and the market ended up like plus 401 or plus 402. That would be ideal. If we can see the market start off high, come down low, because those people that are short, you know what they're saying? They're doing the opposite of what we're doing with Twitter. When Twitter goes down, what do? We buy more. We say, well, I have an opportunity to buy it less than I thought it was. I have an opportunity to buy it at a cheaper price. And if I still think it's going to go here, why wouldn't I buy it lower? Well, flip it and reverse it, like Missy Elliott. You flip it and reverse it. I don't think anyone knows that. Maybe some of you, but I loved it, right? The point is, if you are shorting the market and you believe the market's going to go lower and the market starts higher, well, then you look at that as an opportunity. Great. These fools don't know that there's going to be World War III and the country's going to go bankrupt. I'll go ahead and re-short it here, which would be something that they're looking for. People that want to short the market are so happy it started up today. This is like their Super Bowl. Yes, I finally get to get short, because they don't want to short the market when the market is going down. They want it to bump up and then short it. In fact, in their eyes, they're willing to say to themselves, oh my God, a few Russian cosmonauts or whatever the hell they're called came off the front lines. And I know cosmonauts go to space, right? Anyway, a few Russians come off the front lines and these people are excited about that. Ha, silly gooses. I'll short right here and I'll show you, thanks for the opportunity. That's going to happen. Now it's a matter if those people are going to be successful or not. That's the key. If the market then comes down and ends up negative today, we got a serious problem. That's not good, because those people now feel more emboldened and they're going to short more. And now we have to get to a level where we're just like, where it gets so low that people buy in. But the people that would buy in are going to be scared, because they're like, it was up 400 and came back down. I'm not buying here until it flattens out completely. So that would be really bad. We don't want that. But we want them to feel a little good about themselves. We want to trick them. We want them to start shorting and feel good and short. And they're like, yeah, we're shorting. It's a short party. Short. We want them all to feel good. And then we want them to get the blow out, right? Like they all just get their faces ripped off. We want that. So we wanted to start at 400, come down a little bit, then go flying. And in going flying, we want to see that volume. The volume is the lie detector test of the market. We always say that. We want to see the volume higher. Now, and we want to see the volatility come down. When all of that happens, that's the rip-roaring rally, right? Do we think that's going to happen today? I don't know, but I know that's what I'm looking for. I know that if I look right now and the market's up 600-700, all right, that's cool. People are getting out of their short positions a little bit, but there's more short positions coming on. You see, when the day starts that high, those people look at that as an opportunity. You got to remember, they believe the market's going lower. So when it starts 600-700 points higher, they say, whoa, look at the opportunity. I'm salivating. I'll short here and I'll come back tomorrow. Because what's the odds the market goes up 700 2 days in a row? Probably not very high. So it's not ideal, right? It still offers volatility. What we want is the market up. We want it to be shorted down, and we want it to rebound with strength, with good breath. And that means more stocks up than down, more up volume than down. We want to see higher volume. And I think we're getting close to that. I think the odds are that there is a much higher likelihood that that happens in the next 2 weeks than there is that this market collapses. And I think that by a lot. Now, that's not information we're trading on because, okay, and what's your price points, what stocks, what duration, what option, like I didn't share any of that. I'm just giving you an overall thesis of what I believe on the market. Now, everything we just spoke about was the work it takes to now look at the market. If you cannot go ahead and understand that everything we just did together is a daily assessment and analysis that you have to go through, then you do not belong in the market. Well, actually, you do belong in the market because everyone needs to make money off some sucker, and that would be you. Now, I don't want any suckers on my team, so I'm going to make sure that you're so super duper duper that you're never anyone's sucker. But we want to take advantage of other suckers, right? So let's learn together, let's get better, and let's take advantage of them. And before you say, Ant, I don't want to take advantage of anyone, you're doing them a favor. Because you know and I know the only time we've ever learned anything in this market is when we lost money. So either you lose enough money that you go broke and you get out of it, which is a good thing because you don't belong in it, or you lose enough money that you continually learn and you get better at it and you can support your family. So either way, every time you take money from someone in the market, you are helping them. And that's my story and I'm sticking to it. All right, let's go see what's going on in the market. There's always a really nerve-wracking point in my day. Like I have no clue what's going on. Let's see, we have a chat function. We already answered that. All right, this is each trade. Let's go over here. Let's move this over. Okay, market. All right, we're down 86. So it's kind of exactly what we were hoping for, right? Oh, we're up 400. You know, I really, really wish one day that whoa, look at that Nasdaq. All right, so the market's up. So did the market try to pull back at all? That we have to go find out. And also something really worth noting. Actually, a couple of things I'm seeing right now. So first of all, look at, I'm getting so ahead of myself. First, let's start with the screen. Let's do our work. The Dow Jones is up 1.16%. What is that? That's international money flow, right? And what did we say yesterday? We saw the Dow down 300, but the Nasdaq was kind of break even, right? And we said, well, that doesn't make sense. The Dow's down like 300-400 points, but the Nasdaq is like positive. Is the Dow being used as a source of funds? Because if the Dow, if people are taking money out of the biggest companies because they don't need the safety of Procter & Gamble, Johnson & Johnson, United Health, and they're starting to take more risk on the more reopening trades like the Carnivals and the Zooms, well, that's important because that tells you that investor sentiment is looking to buy things cheaply, that the line has been drawn. And we've said, we believe the line has been drawn. So now we're looking for confirmation factors, right? Confirming indicators. Take a look at this screen. Does anything jump out to you? What does this say? Third points, Dan Loeb cuts Disney stake by half. Disney's in what index? The Dow Jones. Adds tech and reopening trades. Now, I don't know about you, but this is today. I didn't know this headline yesterday, but I can see it happening. You have to be able to read the indexes. It's telling you right to your face. Dan Loeb, do you think this news results, this article came out as he's doing it? No, these guys then go ahead and, yeah, I'm cutting my Disney stake and I'm adding to tech after they already did it. You know why? Because Dan Loeb is a really prominent guy. Dan Loeb bought Disney when it was 70. Dan Loeb came out and he was the biggest proponent of Disney. Dan Loeb is a very successful investor. He manages a very, very large fund. So when Dan Loeb does something, people listen. So when Dan Loeb cuts his Disney and buys tech, he already did that. Now he wants those stocks to go up. He wants to let the industry know, hey guys, I did it, now you do it. Because he wants to be in first. Because if everyone piles in after him, you know what happens? His performance looks best because now everyone's buying the stuff that he bought. How could we have ever known he was doing that? We couldn't. But we could see the volume. We can see what companies are doing. We can make the assessment that smart investors are going to step up and start doing that stuff. And there it is. Now, another thing that's really important on the screen. Bitcoin and Ether rise as Ukraine and Russia tensions appear to ease. First of all, that makes zero sense in the world, right? I thought Bitcoin was like anti-establishment, but now it's pro-establishment. Like, wouldn't you think if companies and countries are falling apart, Bitcoin would do good? You wouldn't imagine when countries are doing better that Bitcoin would do better, which means it's a completely fake headline. It makes no sense. But Bitcoin's up, meaning Bitcoin is up and people don't know why. It's just up, which means there's no actual reason why it should be up, but it's up. which means people are buying it. Why are they buying it? I don't know, but I bet you they think, okay, enough's enough, let's go. So where is Bitcoin? Bitcoin's 44,000. It's up 2,000 on the day. It's up 4.8%. Ether's up 7.9%. Ripple's up. Litecoin's up. Bitcoin Cash is up. Okay. So let's take a look and read the indexes. Now the Dow's up 424. It's pretty good. It's moving. Well, if this is up 424, the other ones have to be up more, right? So the Dow's up 1.23%. The S&P is up 1.45%. Now, again, the S&P is a professional money managers. Excuse me. These are the guys that have to go ahead and run large funds, and their benchmark is the S&P. Therefore, when the S&P is up, this is these guys putting money to work because that's the benchmark they have to chase. So it's chicken or the egg. Is the S&P up because they're doing it, or are they up because it doesn't matter? That's their index. What's the Nasdaq? 1.94. This is your retail stockbroker index. These are the people that are go, 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 go. And what do we say about them? They're wrong 8 out of 10 times, 4 to 5 times. They just are. I would never trust a stockbroker. I just won't. But does that mean that the Nasdaq is not a good index? Does that mean every company in it's not a good company? No, it doesn't. The Nasdaq could do good while these guys could be wrong, right? These guys are so wrong that when Microsoft goes from 100 to 200, they might not be in it. And then it finally gets to 200 and they're like, oh my God, it went up 100%, I better get in. And Microsoft goes down to 175. These guys lose all their money, they get out, and then Microsoft goes to 250. So you can have an index that does good and these guys do wrong. So they're usually wrong. That being said, well, where's the Nasdaq been? It's been down the last couple of days. So if you have an index that's been down, what do you need? You need promotion. You need people to come out there really champion it. Well, guess what? These guys are not showing champions. They got their people in the streets yelling, hey, buy this stock. So we're happy with that. They're going to start saying, buy all the stocks. Why don't you buy this? This is undervalued. This is undervalued. What's the word I just used? Undervalued. So where's Twitter, right? Like, could that be a stock, right? And Russell 2000, 1.61%. These are the smallest, most economically sensitive and or smallest companies that big companies would look to purchase. So when you see the Nasdaq and the Russell outperforming these two indexes, this is excitement. This is money coming into the market. Look at the VIX down over 8.5%. You want to talk about volatility? What did we say about volatility yesterday? It was decelerating. Now look at it, it's crashing. That's a good thing. So if Dan Loeb Virgin Galactic, oh my God. Virgin Galactic stock rises as spaceflight ticket sales open with 150,000 deposit. Let's talk about that. Do you think Virgin Galactic stock went up today because people just found out there was a $150,000 deposit? Do you think Virgin Galactic came out today and just announced 150,000 deposit that no one ever in the history of Virgin Galactic ever knew that there'd be a big deposit? No, of course people knew that. Virgin Galactic is a stock that's Russell Branson's company that competes with Elon Musk's SpaceX that sends people to the moon, that sends people in space. The stock has gotten annihilated, but it's up now. Why is it up? Because hot money's coming into the market. The market, it's looking for things that are down. So how does CNBC describe to you? How do they share a narrative that it's up? Oh, it's 150,000 deposit. So if you're now seeing CNBC looking for reasons to go ahead and confirm that things are going up, there is a motion going. There is something happening. Okay, so let's see what's happening. Because I got to tell you, if Twitter's down, I'm going to be ultra upset. So let's see where everything is. So before we look at our super duper list, let's go ahead and take a look at the QQQ. And full disclosure, I see that the super duper list is up and I saw a Twitter price. I was hoping it wasn't up. So let's put up crypto, right? Let's not look at those. Anyway, so where is the QQQs? Okay, so yesterday, what did we say? I'm putting this here because I know I said it, I just don't see it. All right. So we said, okay, look, the market's going sideways, right? This has been a big down day. Look, big down day, sideways day, price action sideways. We said that we believe the volume was going to be lesser than the day before. We said, look at volatility, it's decelerating, right? That we believe tomorrow is going to be an update. Now, today's an update. Does that mean we're Nostradamus? No, it means we can read a chart, right? So what do we have going on today? Oh, baby. So, hey guys, remember these lines? Anybody remember them? What are we over today? Did we get over that line? Oh, baby. So what does that mean? It means we're probably going to make a run at this line, which means we kind of have a couple of days of go, go, go. So before I say that, let's calm down, pump the brakes a little bit. So the market's up. Cool. Now this volume, is this volume going to be higher than this volume? Because if it's lower, then the market went higher on lower volume. That's not good, right? Because when the people that are short the market, they're not panicking. They're like, okay, the market's up 2%, big whoop. It's when the market's up 3% and 3.5% and 4%. If you have that in one day, they're like, what the F just happened? Because you don't have a market that's up 4% unless people panicked and had to cover their positions. So I kind of think today might be the start of that. Let's see where it ends. If the market ends where it is, and it stayed at this level all day, and it did not sell off, that's really strong. Because that goes to show you people obviously came in and shorted, and there wasn't enough of them. There were buyers that said, all right, you want to short? Take this sucker. Now the shorters are suckers if that happens. Which would go ahead and mean that this volume is at least close to this. It doesn't mean it has to be higher. We want it to be higher, but it's at least close to this. So if volatility is down and price is up, and let's just say volume is sideways, what does that tell you? It tells you got something brewing, because people are becoming way more comfortable. Price is going up, but the volume is like, it's there, it's waiting. Give me a pop. So from what I'm seeing, I would think that the Nasdaq is going to move higher. That's my assessment. Okay. So let's go take a look at our super duper list. Now, Twitter got as high as 36.73. It's actually at the highest of the day. Cool. If I had cojones, I would go buy more Twitter because it's telling me it's up. But fool me once, right? Yesterday we bought it, it was up, it ended the day down. So it is in a proper risk management that I say, okay, let's take a step back. So actually, what I do want to take a look at is what Brooks had mentioned to me via email yesterday. What can I get if I sold calls on this position, right? So what's a covered call? A covered call, so all the things that we buy are calls, right? Calls and puts. We're buying it from someone. Well, someone's selling it to us. So can we sell it to someone else, right? Like, look at this. I have 130 Twitter 40 calls. So what if I said I want to add to this position, right? So I want to sell to open 130, and I want to do it that expires this week. So I would only bring in that much money. I'd bring in like, so let me show you what that would look like. I could bring in $453 right now if I go ahead and sell the right to someone else that they could take my Twitter stock away from me if it hits over 40. Now that's not really all that appetizing, especially if we see a market, especially if we think a market's going to like go much higher, right? So let's not do that. But what would it look like if I did it for next week? I could bring in $2,000 right now by selling the rights of my Twitter that someone can take it away from me by next Friday if it goes over $40. That's pretty cool. But I don't know. I kind of want to ride it a little bit. If we think the market's going to go up, at the very least, I think I'll get a better price for this, right? So I don't want to do it. But let me take a look at these. I also have 38s. I have 60 of them. So let's see what they get me. I bet you they get me a better price, right? So if I sell open, what I say, I have 30 of them. For these, I can actually get, let's say, 23 cents. I could bring in $674 right now. If I sell the rights that somebody could take my Twitter away from me over $38 by this Friday, which is 3 days from now. So I want to introduce this to you because what we did so far was we assessed what we believe the market's going to do. We believe that the market is going to be up today, tomorrow, maybe the next day. We believe that the path of least resistance is higher. Therefore, these prices are going to go higher. Well, yes and no. Because we're selling it on a weekly duration, the time value is going to come in. So these prices might not go lower. But the stock price will go higher, which means we should be able to find somebody that will buy it from us, right? So these should go higher, which means let's take a look at this again tomorrow. If the market starts up tomorrow, say 200, 300, 400 after being up today, then we'll revisit this. And this will be much higher. Maybe we could bring in a couple of $1,000s by selling it to the other suckers, right? That's pretty cool. In fact, what you just saw, look, take a look at this. What if I sold this for next week? Woof, look at that. I can bring in $1,600 right now. Somebody's going to pay me $1,600 right now that I give them the rights to take my Twitter stock over 38 by next week. Now, what Twitter do I own? I own the 38s for next month, which means would I guarantee if they took the stock from me, does it guarantee that I made a profit? Yeah, because if it's over 38 by next week, well, duh, it's over 38 in preparation a month from now. Therefore, the options I bought would be profitable and I would make the money that they just gave me. So a lot of times covered calls is a way that people go ahead and lock in money flow. All right, the stock's up. Let me sell it to the suckers. If they take it from me, cool. See you later. I'll go buy another stock. We believe Twitter's going to go up. So we believe we're going to wait a little bit. Let's give it a break. I think there's a very good chance that we institute this strategy tomorrow. Now, the risk that we're taking in doing that is that this number only exists right now. There's a chance Twitter goes down. Who knows? Maybe it goes negative today. Maybe the whole market goes down and we're like, oh, we should have done it, right? I don't know that. I'm taking the risk that not only does the market hold up well today, not only does Twitter hold up well today, but the market starts positive tomorrow, in which case the prices I'll be able to get for this will be far higher. And let's bring in a couple of $1,000s of other people's money. And if they take the stock from us, see you later. We made money on that too. The name of the game is money. Let's bring in profit, right? So that's that. And that's Brooks, and he's a genius with that stuff. Now, what we can see is it's coming in a little bit, right? Now it's 36.52. It was 36.73. That's annoying, right? I don't like that. Oh, here's another key to the market, Nvidia. So Nvidia reports earnings tomorrow. I think they report after the bell. Let's take a look at Facebook. It's down. Facebook's getting a lot of bad news. People are talking about now in Texas, they're trying to sue them and stuff, which is fine. So Facebook, not really that important. Nvidia, though. Nvidia reports earnings tomorrow. If people all of a sudden start getting into stocks before they report earnings because they're saying, whoa, it's going to happen. Let me get in, let me get in, let me get in. You start getting something. And if those earnings come out and Nvidia does really well, which we believe they're going to do, remember, Nvidia is the 7th largest tech company. So if they do well, the whole tech index is going to go up anyway. So what do we believe now? If the market holds up today and it's positive tomorrow, we then believe Thursday morning it's going to be positive as well, which means Thursday morning, conceivably, we could get out of all of our positions at a profit and or sell our calls. So we have a roadmap, right? Everything is, let's go ahead and identify a map, let's identify a strategy, and let's go ahead and pursue it so we know what's happening. So what I'm going to do now is I'm going to step away. It's 11 a.m., 10:59 a.m., so we're going to get off in a minute. I will look at this again by the end of the day. I hate saying hope, but I really would like to get out of our Twitter position profitably this week. For me to do that, I have to hope that this market ends up positive today and or goes even further. There is a real possibility that there is another leg up today. If this market stays 300, 400, there might be a point where at the end of the day, money just comes flying in. Now, Twitter is really getting on my last nerve because I'm watching it out of the corner of my eye. Now it's 36.49. This is why I can't look at stocks. I'm overly emotional. All right, so let's just leave it alone, see what happens. And that's that for today. But Nvidia is your key, and Twitter is a value stock. It is low. People should be coming in. They're buying their own stock. We want to see the volume increase. Let's see what happens. But a rising tide lifts all boats. So even if Twitter ends up being like a nuisance today, let's just make sure it closes over 36, right? If it closes under 36, I'm going to be really pissed off. But that being said, if the market's up again tomorrow, and if it's up again the next day, all right, everything's up. What's not up yet? Twitter hasn't been up. If the market's up the next 3 days in a row, we will be profitable. Whether we get out at 40% or not, I don't know. But we will sell it Thursday because I don't like waiting. And now I see it 36.46, 36.47, 36.45. Twitter, do you really just try to piss me off all day? All right. Anyway, so that's our presentation for today. Can't wait to see everyone tomorrow. If people can go ahead and do a Twitter dance in the streets, I would love that. I'm going to do it. It looks a little bit like, it's funny. Actually, I'll let you go with this. I texted my wife this morning. I was like, I hope Twitter flies. And she goes, well, Twitter's a bird. It's meant to fly. And I died. So anyway, love all you. I'll see you later. Bye.